So we're at a very interesting juncture, right? Let me first understand this pop that we've seen for a lot of real estate companies in terms of the high ticket value segment, the premium end of the luxury segment. I think everybody's trying to figure out what happens after the 1st of April when that tax thrust is not there anymore. What is it that you have observed in the purchases you've seen in the last couple of months, and what's the outlook, more importantly, for the new year?
Hi, thanks for having me today. Yeah, certainly there will be some kind of impact. I think many of us who are in that sector, in the overall real estate sector, most of us are in the mid segment and upper mid segment range. So there's across the board, there's very few who are really heavily exposed to the super luxury segment. And I think those are the ones who are going to really be impacted. So I think it will again move towards more of like an end user market rather than anything being done for investment or speculative reasons because of the tax impact, and people would have to take a much more sort of measured approach in terms of further investment. So in terms of what we are seeing, there is very good demand in the mid and upper mid segment, and also between affordable and mid segment kind of price range. Depending on which market you play in, Bangalore is the mainstay for us. Bangalore, Chennai, Hyderabad, these markets are much more affordable compared to, say, Mumbai or NCR. So we still see a lot of traction in our markets.
All right. Pavitra, I request you just hold on to that thought. We have a big recovery that's taken place in our equity markets as we speak. The Nifty has moved to the high point of the day. And as we pointed out earlier today, that the Nifty could be opening up in the green, but you'll get that dip. That intraday dip did come about. The Nifty moved into the red, and the Nifty Bank is the one now that's moving towards the 200 EMA, which is very, very crucial. Big U-turn being seen on the Nifty Bank as well. Well, Pavitra, apologies for that. Just need to take stock of the markets. But you're telling us that, the mid to upper mid is doing pretty well. Could you break it up for us? How much of your sales would be mid? How much of it would be luxury? As of now, what is the mix? And geographically as well, if you could break it up.
Sure. So our portfolio is heavily, 80% between the 60 to 1.2 CR range. This for Bangalore is what you would call a mid to upper mid segment. Below the 60 lakh range, there is still a lot of good demand, but the pricing is maybe between 45 to 60 lakhs. We don't play in the fully affordable housing space as defined by our government, which is 45 lakh, ticket size and 60 square meters carpet area. For Brigade also, of late, we have seen some inventory, and again, it's a function of the projects that we're launching at that point in time. So we do have, say, 5 to 7%, a very small percentage in the above 1.5 crore range. So as I mentioned earlier, for us, we don't have super luxury as a very big category for us. Going forward, we do see one or two of our projects launching in that space. That said, again, this is not like a concerted measure or a decision to go into super luxury. It is just that based on each land, we take a decision what would be the right product for that space. If there is an unmet need, we would want to design accordingly to that need and put product out there. Going forward, also, we will see a lot of launches coming in from Chennai, but towards the end of the next financial year. We have done a substantial amount of land acquisition in Chennai over the past financial year. So by the time the designs and approvals come in, we'll see that coming into our launch pipeline, but it would take about 3 to 4 quarters for that to come in. Other than that, contribution is going to be significantly from Bangalore. We are still working on Hyderabad, and hopefully we'll be able to launch some projects there soon.
Pavitra, hi, good morning. You told us that you basically have about 20 to 25% kind of growth targets in mind annually, and that kind of stays on track. But I just want to understand, we had two guests earlier on who were saying that we are at the cusp or in the grips of, depending on how you want to look at, a little bit of a slowdown overall. Even the tech sector is starting to see, a little bit of pullback in spending, especially on the wage side, hiring, and actually layoffs, etc. Also, one is starting to hear about. Any impact at all, Pavitra, as you see it? Even in the past cycles, have you seen any bit of pullback in terms of spending from that segment? That is the affluent, the tech employee cohort in that sense.
I think we can take some learnings from the past, but post-COVID, there have just been so many different shifts in consumer behavior entirely that it would be difficult to just say, well, the past is going to repeat itself. While history does, it may not repeat, but it certainly rhymes. So I think when there is some kind of turbulence in the global economy, there is some impact on sentiment here in India. But what we see on the ground in terms of leasing, in terms of interest from customers on the ground, and we have had a very active quarter in terms of launches, there is no real holding back in terms of wanting to go ahead and get into a new investment for home, whether it is end use or they plan to keep it as an investment. So at least in all of our projects, we haven't seen really any kind of pullback. Of course, customers are keeping an eye out on what might be the home loan rate. They have come back to the 9% range. But previously in FY19, FY20, that was kind of the level of home loan interest rates at that point too. So I think we are sort of looking at a huge unmet need for people moving into different kinds of spaces. I think that is what has really been the impact of the pandemic, and a lot of work from home and reevaluating people's need for space. So as a result, I think that has caused a lot of churn in the market, and that's why people are looking out. A lot of the momentum created post the pandemic also is continuing, and I think that sort of fueled the residential real estate sector, at least, to get fully into the upcycle that is due for over 5 to 6 years, I would say.
Okay, Pavitra, so that's interesting. I mean, from what you say, it appears that at least your clientele has digested higher rates, interest rates fairly well, as long as there's visibility on, of course, the job profile. And we really hope that remains. Our colleague Rima was pointing out that further hiring trends in the IT sector seem to be moderating. But anyway, before we let you go, could you leave us with some numbers and outlook perhaps on, the launch activity that you anticipate over the next few quarters, perhaps volumes or bookings for FY24?
Yeah, so our launches are sort of, based on approvals coming in. We've had a very good launch quarter. We're just wrapping up the quarter, so I'm not able to give any, concrete numbers. But we've had a good quarter, a very good quarter. And I think the launches that we have will also hold us in good stead for the next couple of quarters as well. As I mentioned, we are working on a number of new launches coming up for the next financial year. A lot of it is based in Chennai, and that will come in through the second half of the year. Overall, I think we've also taken up prices across our portfolio, and we're seeing good support for that from customers as well. I think all of this points to a pretty healthy environment for the real estate sector. There will, of course, be competition, and it's a constant sort of a push and pull that is happening in our industry. So I think those companies that can have a very measured approach to acquiring new land through internal accruals and not necessarily by taking debt, I think that's a safe way to approach what could be, headwinds for the sector. But at the same time, I think there's enough demand from customers and enough supply from good developers to actually see a very positive trend in the coming financial year.
Okay, all right. Sounds good, Pavitra. Thanks very much for